What's up, you guys? Welcome back to the channel. So in today's video, we actually have some important information to go over in regards to NIO, Tesla, and some other electric vehicle stocks. And we're also going to go over why these stocks are all down and why the entire market is actually down. And I'm also going to cover if you guys should be buying shares of these companies right now. But before we actually get into the video, for those of you who are new, my name is Evan and I make videos showing you guys different ways to make money in the stock market. So if that interests you guys, make sure you subscribe and hit the notification bell so you never miss when I upload. Also, while you guys are down there, if you wouldn't mind hitting the like button, I would really appreciate it, and it lets me know that you guys enjoy these video updates every day. But with that out of the way, if you guys have been paying attention to the market yesterday and today, you know there's been a pretty steep decline, not only in electric vehicle stocks, but in the overall market. And taking a look specifically at NIO, you can see they're actually down almost 7% on the day, and they're trading right around $47. Now on the 1 week chart, they're actually down about 18.5%. And this is where you can see yesterday they were actually affected pretty greatly. And it wasn't until the end of the trading day where they saw a very sharp decline of quite a few percent. Now today they did somewhat recover back from that steep decline, but they're still down quite a substantial amount on the week. And NIO is not the only one being affected by this overall market downturn, because Tesla is actually down about 3.5% today as well. And they have a very similar trend as NIO, as you can see by their chart. And on the 1 week, they're actually down about 11.5%. And again, we know that a lot of these smaller EV stocks follow Tesla because Tesla is the leader in the EV industry. And so that big drop wasn't just NIO, it was mostly due to Tesla, because you can see on the 1 week chart, Tesla has that big drop as well. And they recovered pretty much the same today as NIO did. And they're trading in a very similar way as NIO. Or I guess I should say NIO is trading in a similar way as Tesla. But I'm sure you guys get the idea that Tesla is the leader and they kind of paved the way for these smaller EV stocks. But I'm sure a lot of you guys are wondering why the EV stocks are dropping so much. And not only EV stocks, but the entire stock market. Well, it's actually due to a few things. And the first thing is that US futures fell on Tuesday morning after stocks tumbled on Monday. And this again was with tech firms and EV stocks being down again. And then rising bond yields also caused investors to second guess the recent equities rallies. And one thing that's actually kind of odd is that Bitcoin has actually been plunging quite a substantial amount as well. If you guys follow Bitcoin, you probably know that they actually hit a high of around 58,000 last week. And now they've actually dropped down to about 48,000, and they may actually be dropping even more at the time of recording this. And this isn't to say that Bitcoin doesn't follow the market at all, but we've seen them jump up huge, and they actually have kind of been more reflecting on how EV stocks have been moving. Bitcoin and these other cryptocurrencies really haven't been following the overall market. They've just been going up pretty much to the moon. And so to see them actually follow the market and drop down as the market's dropping, at least I'm kind of surprised, because we've seen Bitcoin and other cryptocurrencies go up when we've seen pullbacks in the overall market. But the drop in US technology stocks was due in part to the NASDAQ 100 and S&P 500 futures sliding. And then, like I mentioned, after rising bond yields spooked investors, this triggered a sharp sell-off on Monday. And of course, we're seeing that trickle over into Tuesday as well. And there was actually quite a few big tech names that were affected, like Apple and Amazon, that actually shed 2% or more. And this was as doubts were setting in about the recent rally, not only behind EV stocks, but behind a lot of tech stocks that have been seeing substantial gains in the past few months. Now, I know a lot of you guys are actually fans of NIO and a lot of other EV stocks. So I'm going to touch on why NIO has actually been affected and what's affecting their share price so drastically. And it does have to do with both Tesla and Bitcoin, because there really wasn't any obvious news driving shares lower for NIO. And it looks like it's just been caught in a sell-off that's affected other hot stocks, including Tesla and Bitcoin. So as investors who are buying Tesla, Bitcoin, and NIO, as they start selling their shares of Tesla and their Bitcoin, they're probably going to sell shares of NIO as well. And there's a lot of big investors and big firms that hold shares of Tesla, NIO, and probably a lot of Bitcoin as well. So they're not going to sell just one of their positions. They're going to start selling and taking profits off of all their positions across a broad market. And while there are a lot of good reasons to be very bullish on NIO's long-term prospects, it's still hard to argue with the notion that their stock has become very expensive. And with all things considered, and the fact that they only delivered 43 43,000 vehicles in 2020, it really does make people start second guessing what they're actually worth. And they're still sporting a market cap of nearly twice that of Ford. And so this isn't to say that NIO isn't what they're worth or that they're not going to be worth more in the future. But I think a lot of investors are starting to realize that they should take profits while they can. And when they've seen their portfolio double or triple in value, there's a certain point where you have to take your profits. And it's always better to take profits than to take a loss. And that's what a lot of investors are starting to realize, especially with the potential for big downturns in the market. Now, there was actually some good news for NIO on Monday, but of course we didn't see their share price react very positively to this news. But this was actually relating to their second-gen battery swap stations. And on China's Auto Home website, they reported that NIO is now in the last stages of testing their second-gen battery swap stations. And NIO also expects to begin deploying these stations by April. Now, if you guys aren't familiar with their battery swap stations, it basically allows you to drive your vehicle in, and within a couple minutes you get a new fully charged battery just by swapping out your used battery. And currently there's about 200 battery swap stations, and they've become a very key part of the overall business strategy for NIO, because this also allows buyers of new NIO vehicles to choose to buy the vehicle without a battery pack, and this lowers the initial purchase price. And then they can opt for the subscription service where they're paying monthly to have a battery pack. But again, this does reduce the initial cost so people can buy more expensive vehicles, or they can buy an electric vehicle when maybe previously they wouldn't have been able to afford it. But with these second gen stations, this is going to allow the stations to handle more vehicles per day. And it's also going to bring down the estimated time that it takes to swap out a battery. And NIO also hopes to have 500 of these stations up and running in China by the end of the year. So I would say during a normal trading day, this would be bullish news and we would see NIO react very positively. And maybe that's possibly why we didn't see NIO pull back quite as much as some other stocks have seen. Now, that's not to say they didn't have a large pullback, because they did, as we're all seeing. But again, I think that if this was released on a normal trading day where the market wasn't pulling back, NIO would probably have jumped up quite a bit, and investors would all be looking at this as a positive catalyst to push NIO's share price up. But given where we're at right now and where the market is trending, of course we didn't see NIO react quite like that. Now, I also want to mention that NIO and Tesla aren't the only EV stocks being affected. It's the entire EV sector and a lot of tech companies as well. And just to give you an idea, LiAuto and Xpeng, which I'm sure a lot of you guys are invested in as well, they're also continuing to fall alongside NIO and Tesla. And as we know, it's normal for stocks to fall alongside the market, but this doesn't exactly explain why all these EV stocks are dropping both yesterday and today. But to really answer this, we have to take a look at Tesla, because again, like I mentioned earlier, we all know that Tesla is the leader and they're sort of the benchmark when it comes to EV stocks and where the overall trend is in the EV market. So while Tesla stock is seeing quite a bit of a dip, it seems very reasonable that other companies in the same line of business are going to see their shares fall as well. And this is especially true when the stock taking the dive is the leader in the market, and that leader is Tesla. But why Tesla is pulling back specifically, it could be a whole host of reasons. Now, one of those reasons is that investors are finally starting to see a neutral ground, and they're starting to realize that these stocks can't go up forever. And oftentimes there are just days where people sell their shares and collect profits, and there's no reason to think this couldn't be one of those reasons as well. Now, there also are some concerns related to stimulus checks and how that could affect the entire economy going forward. And while a lot of people do need a check, that's not necessarily going to be a positive thing for the economy, especially when that money all has to be paid back. And so that is a concern among a lot of investors, not just in the EV sector. And so that is part of the reason why we're seeing the entire market pulling back. Now, there's also a lack of hype around surrounding EV stocks. And one of those stocks new to the market is Churchill Capital. And they were actually taking a beating both yesterday and today. And this is despite them actually announcing that they're going to merge with Lucid Motors. Now, if you guys aren't familiar with Churchill Capital, they're just a SPAC that's raising money to bring Lucid Motors public. And there's been a lot of hype around them because there was anticipation that they were going to merge, but it was never officially announced until recently. And I believe yesterday was the day that they finally announced and confirmed all these rumors that they're going to be merging. And according to a press release, the two companies are going to be coming public at a combined equity value of just under $12 billion. And one thing that investors should take note of is is that this is the largest ever PIPE deal associated with SPACs. And I'm sure a lot of this has to do with all the hype around Eevee stocks and a lot of people trying to find the next Tesla and the next NIO. And if you guys have done any sort of research on Lucid, whether you believe in them or not, they definitely have a lot of technological advancements, and especially with their CEO being an engineer at Tesla, or I should say a previous engineer at Tesla, it's giving a lot of people hope that Lucid Motors could give Tesla a good run for their money. And also, if you combine that with the fact that they are an American company, and I know a lot of investors prefer to invest in American companies over foreign companies if they have the chance. Now, for those of you who made it this far into the video, I want to hear if you guys are still buying shares of all these EV companies and these tech companies, or if you're maybe waiting for a bigger pullback, or if maybe you're concerned that the entire market is going to crash. So let me know if you guys are still loading up on shares, because personally, I think the red days are the days to add more shares. You don't want to buy stocks when they're at all-time highs and then they just pull back and you lose money. You want to buy at the lows and sell at the highs. And while I'm not a financial advisor, I think that's pretty common knowledge. So personally, I'm still loading up on different stocks as of right now. And if they continue to drop even more, I'm just going to be dollar cost averaging all the way down. So that's personally what I'm doing, but let me know what you guys are doing down in the comments, and if you guys are still buying stocks of all these companies. And if you guys haven't signed up for M1 Finance, if you guys sign up and deposit $100 into their platform, you'll get a free $30 just for signing up and depositing money. So right away, that's a 30% return on your money. So make sure you guys get in on this deal while you can and use the link in the description to sign up. Also, if you guys want to join the Discord, you can use the link in the description or the top pinned comment down in the comment section. And if you guys enjoyed the video, make sure you leave a like because it really does help out the channel. And with that said, thank you guys so much for watching, and I'll see you back here in the next one. Bye.